me say, like 100 times. We really believe that that credit building builds assets. I mean, it's the most important and fundamental part of our work, and that's what we're here today to share with you. I have two of my colleagues, Kristen Schell. Kristen's been with us for, I don't know, 6 months or thereabouts.
Almost a year.
Almost a year, full-time. Before that, Kristen was working with us as an intern. And we're really happy to have Kristen help us manage the credit building part of our business. Galen Godolphy, my friend and colleague, has been with Justine Peterson since before he bought his home. Galen, but in fact, both Galen and Kristen are Justine Peterson customers as well as staff. Galen bought his home with the assistance of Justine Peterson, I guess it was what, 8 years ago, 7 or 8 years ago. And Galen, shortly thereafter, came on staff, and we're really happy to have Galen with us as well. So Galen and Kristen will make a brief presentation, and then we'll open it up and do some work in credit building in a one-on-one way. I think in this session we'll probably speak generally about credit, but as we get along, we'll do individual one-on-one work with each of us if you choose to do that. So I'll give it to Kristen.
Sure. So what we do is we're out in the community talking to clients about how to build credit. And Justine Peterson, we believe we have a different credit model than most credit repair, and we like to debunk the myths of how to build, of how not to build credit, and really how to build credit. And it can be very, very simple. The way that we do this is we have, you would want to have 3 active lines of credit going, okay? So we talk about, a lot of our clients come in and they have, you know, a couple collections reporting and, you know, maybe some outstanding debt, but we talk about, do they have any good lines of credit reporting to the credit bureau? So that's the most important thing. You want to have about 3. 3 is the magic number. I don't know where the credit bureaus came up with 3, but 3 we've seen has maximized our credit score, okay? And then the other 2 important steps in building credit is not only to have 3 active lines of credit reporting, I'll go back, 3 active lines includes a student loan, a credit card, a personal loan, a home mortgage, even just a small loan, okay? And a $100 loan, a $20 loan will do the same thing as a $100,000, $150,000 loan. So we find that you don't need to be in a huge amount of debt in order to build credit with those lines of credit, okay? Second step in building credit is to pay on time. Really the most important once we have some good lines of credit reporting to the credit bureaus is to pay on time. And when I mean pay on time, you can never be 30 days late. If you're 1 day late, if you're 5 days late, if you're 15 days late, it's not going to be reported to your credit report. Okay, maybe the creditor might charge you a fee, a late fee, but it doesn't get reported to your credit report. So you would never want to be 30 days late. That's the key. Once it's 30 days late, 31 days late, it gets reported to the credit bureaus. And it can drop your score. It can drop your score a lot, actually. We've seen it drop a score, even just 1 late pay can drop your score 60 to 100 points. So that's how important it is that when we set up lines of credit, that we understand that, or that you understand that you can afford that line of credit so that you're paying it on time, okay? Our third step in building credit is to keep your balances low. And that's really only on credit cards. Credit cards is the most important. And so on a credit card you have a credit limit, and your credit limit's maybe $1,000. I never want you, in order for your credit score to be high, I never want you to have more than 30% of your balance to credit limit. Okay, so if you have $1,000 credit limit, I never want you to have more than $300 on that credit card. Okay, so it's not to consume on, it's to build credit with. Okay, and so that's the third important step in the credit scoring game. The last one, the fourth one, is to have a relationship with your creditor. So you want to have, and that's usually the hardest. Everybody, they can open 3 lines of credit, they can keep their balances low, but then we have to have a relationship. And we need to see 6 months, 12 months of paying on time for that credit score, for it to really increase your credit score. But it really is an important step. And just lastly, the last thing that I wanted to talk about is how important your credit report is and your credit score is. We have this motto that credit is an asset. When we think of an asset, we think of something that is valuable to us, something that, like a home that we can exchange for money, something that we can get something out of. Your credit report is the exact same thing. It can save you hundreds and thousands of dollars. With a high credit score, you can save hundreds and thousands of dollars in financial products, on interest rates, insurance rates, even rental properties. You can save so much money with a high credit score versus somebody who has a low credit score. And so, not only when you go to a lender do they look at your credit report, employers are starting to look at credit reports. Insurance companies, your insurance rates are dependent on your credit score. So you could get that car at a high interest rate, but then your insurance rate is going to be higher. So you're going to be paying a lot more than somebody with a high credit score. Rental, banks, creditors, they all look at your credit score. And but I do want to say that with those 4 steps that I outlined, it's very easy to increase your credit score, even with past collections, past debt. If you decide today, hey, at some point I had bad credit, but I want to turn over a new leaf, you do have that possibility, okay, by just taking some easy steps, getting some good lines of credit going, paying on time, and being responsible with those creditors.
Kristen?
Yes.
Dalen?
Well, I'll tell you what, I'm going to make a few comments about what's going on here today. And this Dr. G is delivered, by the way. He's delivered.
Yeah.
And I really appreciate this. I first of all want to say a couple things. I started my work with Justine Peterson actually at the Helen Davis Center about 9 years ago doing credit counseling with people living in a housing development. And from there, we've had our East St. Louis office open at the Emerson Park Metro stop about 1.5 years ago. And prior to all this, I was at the University of Illinois and our graduate program was ESL, that was over just past Emerson Park there where the youth build was. And I just want to say that I've had a working relationship with residents of East St. Louis. This is all about economic empowerment. And when we met with Dr. G and Tiffany and Joyce Coleman about 1.5 weeks ago, that's what we're talking about. This is the first step in getting there. Building a credit score results in all sorts of enfranchisement issues when it comes to economic empowerment. I'm serious about this, and I'm hoping today this is just the start of you telling your neighbors and friends that we can work one by one on building assets. We actually met yesterday, Kristen and I, with Joyce Coleman again, and this fellow Steve Connolly, and we're doing something with the Black Hair Project, a partnership of going to salons and barbershops in St. Louis and trying to disseminate the same amount of information. That is the whole idea, how to empower people one by building their credit. It doesn't take a lot of money, but it's pretty exciting. And then today we'll talk about how maybe just borrowing $100 to $150 can actually save you thousands over a lifetime of other investments. And Kristen did a good job just talking about how it impacts basic things like car insurance and monthly payments on a car and monthly payments on your credit cards. We do a lot of household budgeting, and when I look at those budgets, we look at income and we look at expenses, and many times there's a shortfall on money coming in. And how easy is it to tell somebody just to go out and double your income? That can't happen, but raising your credit score is incredibly possible. It's impossible within 6 to 12 months. And raising that credit score lowers monthly payments on things like cars and even car insurance because it's all based on interest rates. So again, all of a sudden money can magically show up in household budgets that weren't there previously, or the money wasn't there previously. So anyway, I'm excited to be here. Again, this is day 1, and I'm hoping this crowd will get even larger and larger. Though I also want to say we're about one-on-one. So as much as we're gathered as a group, I also want you to know that we're going to put a face to the counseling that we're doing. You'll have our business cards today, and it's not about just gathering in seminars. It's about talking to you one-on-one about your issues, about issues with your family in terms of finances, your neighbors, grandma, whatever, okay? Glad to be here today.